we're friendly and we're also motivated to make sure that those things come in. And to the extent we have been in existence for almost 2.5 years, we have passed a lot of people who have come in to invest in the gas business. But what we have found out is the process. Most of them don't adhere to the process. They come in, the documentation is faulty, but we try to guide them. But what we do mostly when you come in, we take you through what we call a permit and consent workshop to make sure you understand what you need to do and what the regulator need to do for you. And that we've done very excellently too. So I will tell my elder, we have our website. Everything is very clearly spelled out. And if you need more induction or explanation, our offices are open. And personally, you can meet me. Even this morning before I came here, someone came. Apart from people who have been writing, and there's some person who have written to us, we have not written back or responded immediately. So I think we're on the right road to bring awareness, to enable the business. But again, some of those snacks I found out was the funding issues. Again, the government in its own wisdom have put the MDGIF, that's the Midstream Downstream Gas Infrastructure Fund, to help those who are serious for that business. So I don't think there's any problem as we're going. And it's a learning curve for everybody, for us, for them. So as we come forward, the clarity will be shown.
All right.
So
Thank you very much. Kevin, please grab the mic. Thank you very much. Let's give both gentlemen a round of applause. I'm sure we'll find a place to align. We'll find it. Kevin, wait. We'll find a place to align. Before you speak, Prof, I know Prof was talking about warehousing every process of approval within a particular place, and I was saying, what if we warehouse everything inside an MDPR? If there's any other regulator or any other agency of government that plays a part in approval process.
You see, I will give kudos to NMPDPR. They've been here, they've been around for a little while, and you can see their footprints on the things they have done and that they are doing. But having said that, they should be given absolute authority, because they have their rights. They'll give you approvals, and then there are other approvals that is not emanating from an NDPRA.
So that's what he is speaking to, yes.
And what does that do to the players in the field? It shackles them. And NDPRA is doing its best to try and untangle the past and bring us to today and for the future. Let's give them the power to do that completely.
Nice. Thank you. So, Council Chair, I hope you got the gist of what we're saying here. That's one of the resolutions I think we can take away from here, that NNDPRA should... Kevin, please grab the mic. NNDPRA should be given the authority that they have, more of it, and let every process of approval regarding gas business be domiciled with them, and allow them to make it easy, for any player to get all the approvals they want within the shortest possible time to accelerate investment. Thank you very much. Okay, Mr. Pinda, I see you. Good afternoon. Welcome, representing PTDF. Thank you so much. Let's get into the business. Our speakers are here for the technical presentation. They would come up, take their presentation, take their seat. Those who are in the room. Those who are online, I will cue them once it's their turn. The likes of Dr. Ni, Dako Ashanti, good afternoon once again. We'll listen to you shortly. And the likes of Ami Ibrahim Ahmad Nasser and Ahmad Gamel, as well as Hussein Ibrahim, would listen to you later. Obed Opoku is here in the room with us, so we'll listen to you later as well. Let's now begin our technical presentations. First off, we're looking at gas to power challenges and opportunities. Now, this speaker should know, one, because he's been in this business for decades, two, because he's overseeing a gas business of an E&P company that recently launched one of their facilities to increase gas addition to the domestic market. Please welcome with me Managing Director, Ano Gas Company, Engineer Effiong Okon. You're welcome, sir. You ready to talk to us now, sir? Please, yes, make your way. Let's give him the applause one more time. He will talk to us. Yes, I know you are born ready anytime. You are born ready.
Just came in from Lagos. I wasn't sure if I needed some time. So good morning or is it afternoon. Yeah, good afternoon, everyone. And I think it's always a privilege to talk to any forum. I like the earlier conversation that we can't give up. We have to keep the advocacy going. We all travel around the world and see how things are happening. I'm sure we'll get there one day. So let me start off by first saying big thank you to SPE and also the organizers of this event. So thank you for the platform to keep, sharing our thoughts and views around how to move Nigeria forward. This borders on Nigeria's energy security, and hopefully from all these sort of sessions, whether it's SP, whether it's NESG, or all the various advocacy platform is around trying to galvanize intellectual capacity to help us. I like the last word, untangle or detangle all the entangled issues. So thanks, good to see everyone. So I'd like to stand on the existing protocol. So what I'll do, I just have about 15 slides to just put a bit of context of where we see the issues, the opportunities, and also the challenges around gas power, right? So let's have the slides on, please. I'd sent in earlier on. I hope they got the slides. I can talk without slides, but it might be easier for the slides to be on. They're not ready. Okay. So when I hear government and all the law discussion, and I think to be honest, the PIA has been quite one of a big enabler. And also the PIA came in 20 years late. Unfortunately, capital has moved around the world. So if you look at from the investor's perspective, before COVID, oil and gas wasn't really an attractive place to put money. A lot of companies lost so much money because if you all remember, the whole advocacy for energy transition was quite strong before COVID. We all thought that, wind, solar, renewable energy will probably have displaced oil by now because there was almost 50 million barrels of oil destructs during COVID because people had to stay at home. And fast forward, you're right now, fast forward, post-COVID, Ukraine invasion triggered the need to go back to investing in oil and gas again. But we suffered, we wasted so much time, and it doesn't happen overnight. It takes time, and that's a struggle. So the biggest issue I see today is around how can we attract investment in, because we can speak all the grammar and all the nice talk. If you can't attract investors in, you're not going to move the dot. Government doesn't have money like you heard. Most part of the world, government doesn't really put money on the table. It's private sector. And that's what we see when we speak to investors or bankers or lenders, whether it's New York or London. The question is always going to be around, can I recover my money if I put my money in Nigeria? Nigeria is not really where we want to come to be honest. So it's a bit of a challenge. How do we attract? How do we get this system, our country, back to one that will be investors' destination of choice? Okay. So what I want to run today is just quickly talk a bit about how we see gas evolving over time, power, and from the private sector, some of our experiences in terms of trying to make investment case, raise capital, and trying to get molecules out of reservoir to wherever that molecule is going to, whether it's going to end up in a gas turbine or in a fertilizer plant or wherever. So just to share some bit of thoughts and some bit of reflection. I think this slide just shows that, very simple. There are no rich countries that have low energy consumption. Only poor countries have low energy consumption, sadly. How does this thing work? Can I even use this? Can people even see can you see the slide? Just checking. Okay. It's not working. Can someone drive the slide then, maybe? Okay, I can move it. With which one? I'll move backward. Okay. Back with this one and then forward. Okay. Okay. So what this slide just shows that, despite, Africa holding 8% of world's proven results for gas, it's still will remain the most energy poor continent, which is quite unfortunate. And right now, 57% of utilities in sub-Saharan Africa really can't even cover the operating costs. And this is the big problem where we see. So when people say why can't Nigeria have so much gas, you can't get into power? The truth is, I've looked at a lot of power investment. The discos, number one, are under recovering the investment. They can't even break even in terms of their basic running costs. Talk less of how do you then attract investment into growing the power sector. Major challenge. And then if you look at the countries here, on the right-hand side, those are rich countries, so middle income, high income. You can see that most of the Western European countries are in that upper right-hand quadrant because they've got very high per capita income in terms of electricity. And also, if you then look at what you have on this, on this quadrant here, very low income, poor countries, and you see Nigeria features very lightly in this quadrant. So high population countries, lots of resources, but poor. So that's a conundrum, isn't it? If I then move on forward, which I found this thing actually this slide very interesting. If you walk this slide from left to right, you see China, the red one. You can see how China has grown astronomically when it comes to, the first one is around demand, so demand for power. Europe and United States pretty much flat. The middle one is about population growth. And then the rightmost chart is around power consumption, so actual utilization. If you then go to the right-hand chart, that's the next one there, you see a very interesting thing. Do you know in 1990, the average electricity consumption per person in Africa was actually higher than Southeast Asia and India by over 65%. So Africa was way ahead in the 90s. But back forward today, you then see that Southeast Asia overtook Africa in 1995 in terms of consumption. India's pretty much same. But conversely, Africa's per capita consumption has remained stagnant for over 3 decades. It's quite sad, right? For 30 years, we pretty much haven't really moved forward. And the rest of the world is moved behind. And that's a key message to note from my presentation. Another thing emerging is renewable energy is actually becoming quite strong, like you're all aware. If you look at the 3 scenarios today, we talked about the net zero emission scenario, accelerated scenario, or the new momentum. In all cases, the bottom line is there's a lot of advocacy to drive down the percentage of hydrocarbon in that energy mix. Renewable is growing. There's a lot of electrification from renewable energy. And then there's this very strong low carbon energy systems advocacy globally, leading to lots of low carbon hydrogen becoming quite strong in the market, especially in North America. I'll go on to the next slide, which shows, if you don't look at gas, globally, it depends on what scenario you look at, but the most common scenario, which is the stated policy scenario, is one in which gas keeps growing for about 4% till 2050, and then gas remains flat. If you then look at the pledges scenario, which is what every country has made pledges on, whether it's 2050 or 2060 net zero emission, you then see gas in that mix declining. And then the net zero, which is the most aggressive one. But if you then come to Africa, in all scenarios, you can see that for Africa, really, gas is pretty much the transitioning fuel for us here. That's why you see gas will continue to grow into the future across all the countries, just like the professor just talked about trip to Mozambique, where there's a massive investment in LNG. Mozambique as one of those countries where they're really pushing ahead in terms of gas investments. So what this slide also shows is just if you then look at from 2010 to 2020, which also comes back to the point made earlier on, across the continent, you see major investment in gas, about 15% between 2020 and 2030, whereas in Egypt, all the way to Nigeria, you all the way up Trend 7 and all the rest. But the bottom line is if you trend the investment we see across, there's really major growth investment with new projects we expect to come on stream in the next 5 to 8 years, yeah. Similarly, on the earlier conversation around driving low carbon systems, you'll see even for domestic consumption in Africa. The slide on the other side shows how biomass is being displaced with gas. Diesel is also being displaced with gas as part of this whole working towards a low carbon intensity energy system. So quite a very good trend across, whether you're looking at North Africa, South Africa, Sub-Saharan Africa. So it's moving, but like you said, you heard earlier on, it's kind of slow, and that's just the challenge we see. So in terms of opportunities, according to a 2018 study, by Power Africa, Sub-Saharan Africa has only used 5% of its potential. Imagine 400 gigawatt if we're to pivot towards gas to power when it comes to energy base load. We've only tapped 5%, and that's because there's so much gas available in the continent, from Nigeria all the way down to Cameroon. Everyone has got gas, whether it's Algeria, Senegal, Mozambique. You see all the big gas players here. This is almost about 900 TCF of gas. So our problem is not really around whether we're a resource-rich country, right? But it means nothing if we can't really translate that resource to real value. And I'll begin to talk a bit about the problem in this slide. So I've covered the opportunity, but now I just want to do a little bit around what are the issues. So if you look at our nation as a country, you know, national access to power is about 60%. If you go to the villages, rural areas, it's even worse, it's 26%. For a 200 million population, I think only the operational power is roughly about 6 gigawatts, 6,000 megawatts. Only 80% of Nigeria actually electricity comes from the grid, comes from off-grid like diesel, petrol, and we have almost half of our population, 90, you see sometimes 100 million people who don't have access to grid electricity. So what are the issues? The issues is pretty much what I tried to articulate on the rightmost part of that chart. A lot of issues. First one is pretty much the grid system is bad. We all know that. Discos can't get enough from the national grids. The tariff is low. We've run a lot of investment cases to make, for you to deliver an IRR around 15%, you have to sell power above 200 naira per kilowatt hour. So if you look at the old tariff of 60 naira, it doesn't cut. You can't return an IRR. And if you imagine today, just think about like a businessman, you need to go out to raise dollars, 12% if you're doing debt. Naira debt, you all know the CBN MPR, right? 25%. If you don't do a weighted average cost of capital in between those two, you need to return an IRR above 20%. But at current tariff and the amount of capex you need to put into to make an investment case, you can't even get up to 5% IRR on the investment. And those are the issues why you haven't seen any new power project come off the ground, apart from the Azura, which has been probably the most, which has a lot of issues in terms of PRG and risk guarantee. There's no money, liquidity, and working capital. Discos don't have money to run the business. Problem around investment in revenue. And there's a huge indebtedness. Even for where there are existing investment, the average ATC and C is about 40%. So ATC and C is aggregate technical, commercial, and collective losses. So what that means, if I generate 100 megawatts of power, I lose 40% either to thefts or people playing around with meters and they don't actually pay. So 40% gone. Then you have the issue around the tariff that's not cost reflective. So you can then add all that up, you can see why there has really not been any investment in power. It just doesn't make any sense. I can't go to London or New York, raise say $1 billion and say you want to put in the power. You're not going to get anybody show up for that. So that's some of the challenges we see. So if you don't look at the issue around the grid today, so you have all these numbers, it's available in the public. UK, from renewable energy alone, generates about almost 16 gigawatts of power. Renewable energy, wind, for example, right? We have installed capacity of 14. What's available is about 4.5. What gets to all of us is about 3. And then we then have to look at diesel and other sources to get about 22. So we're working on, not just like Richmond did mention, which is one of the 7 NMPC projects, is the first that's really gone off the ground. We're working towards commissioning startup sometime in end of Q4 this year. That's a 300 million scope of gas. We'll bring about 1.5 gigawatts of power to the market. We'll support 1.5 gigawatts of power. So Nigeria needs almost like 10 kind of annual, to be honest, to start closing the gap. And that's a real key message on this slide. So when I go to how do we see this space evolve as we progress? How does, you've heard about all the incentive government needs to work on, but what's really critical? Number one, governance is key. Governance, without governance, nobody would like to bring in capital. The market needs to come to this point where it's actually tariffs driven by, demand supply, not subsidize the tariff. On-grid power, and then also renewable energy has a big role to play. If you look at what's happened so far, I would say there's been quite a lot of improvement in the system. The first one is the new act, which was signed into, I think, early this year, which allows states to generate and distribute and transmit power. Is a very strong opportunity, for example, for investors to come in. So Lagos State is already taking the lead. You can see they've set a target of 4.5 gigawatts. Lagos gets about 1 gigawatts from the grid right now. And from all the discussion going, they really came to allow bilateral discussions. So if you've got investment to generate power, you go to an area, you sell power, you just discuss how much tariff. So it's a bilateral agreement between the producer and also consumer. So there is no involvement of government in terms of subsidy and all that. And it's happening already at small scale. It's just how to scale that up as an example. So we need to move to a bilateral sort of agreement where cost reflective tariff, and then also encourage the energy transition towards renewable energy. So those are some of the sort of nuggets we see, some bit of opportunities around how we can begin to debottleneck the system. If you don't look at the value chain, it's massive. So, and people can play in all those spaces. If you look at exploration and production, I did talk about the PIA, and a lot of the work with NEPRC is done now, and also NMDPRA on the midstream downstream side, really shows that whether you want to play on the upstream side or you want to play on the midstream side or on the distribution side, there's a massive opportunity. People talk about 200 TCF of gas already. People fail to realize that there's actually 500 of TCF of gas yet to be explored, because the very rich, all the basins in Nigeria is quite rich in gas. The fiscals in the PIB now means if you invest in midstream, you pay lower tariffs and also lower taxes, and that's what we're leveraging on in the annual investment. Infrastructure, lots and lots of work going on. I think the last NGIC big challenge to cross River Niger means the OB3 goes on stream. Hopefully once they cross River Niger, you can then push in about 1.2 BCF from that east to the west infrastructure axis. So key, how did also get gas beyond all the NGIC? So CNG, you can come in and play in the CNG space. Mini LNG, you can transport gas over very long distances. So there's a whole lot of opportunity, but also a lot of challenges. How can we use technology, for example, for billing all these people stealing power? You can use technology with smart meter to reduce the ATC and C. So there's a whole lot of opportunities we see playing out in this whole space. So additional to what I just mentioned, a few other areas that's quite interesting is the abundance of gas is a big one. Regional collaboration, we're taking a lead there at CEPLAT. Government policy, quite a lot of policies. We have the National Gas Expansion Program, NGP, the Nigerian Gas Transition Network Code, which is another great opportunity, and then financial incentive support, adequate on-site security, which is also another big issue. If you look at last few years with the illegal crude theft, is also having an impact on gas as well, because sometimes, saboteurs go into pipeline without knowing whether it's gas and oil, or oil. Sometimes there's a bit of a locked-in potential. The challenges I talked about: pricing, capacity constraints, supply security, financing constraints, security and safety. So in the financing space, I think there's a whole lot of world change happening now. Africa is there's a lot of advocacies to put in framework and institutions that can actually finance projects specific to Africa because of the advocacy of this just transition that the Western world can't really determine our pace. So those are some of what we see as opportunities and some bit of challenges we see, which we can, if you can overcome them, then the future is bright. Energy, power, gas is quite critical. If you look at all the SDGs, almost 80% of the SDGs depend on having reliable, affordable, and environmental friendly energy. So we can kiss these SDGs goodbye if we don't address the issue with our energy deficits. So from ending poverty, gender equality, all the SDG goals are pretty much underpinned by the having reliable source of energy. Then if you don't look at it, how we look at how do you establish a development case for natural gas. So increasing supply is quite critical, especially if you look at our base. And we strongly feel gas is going to be is a logical transition fuel for many countries, and that's why you see lots of investment going into the gas business. Also with renewable during latency period, you need a backup, and gas falls in nicely, especially for power. You also can't build houses or cement factories, all these major commodity sort of businesses, glass, steel, all rely on gas. So huge impact. And then I heard, was it Richmond, you talked about biomass. People actually die from biomass. We don't actually realize some people are dying from it. So the whole advocacy to get a lot more LPG into the community, into the market, is to try and reduce that people are dying every day from biomass, negative bad gas. So that's something that gas is going to help make a huge impact. Big population, we need to feed ourselves. We can't feed ourselves today, but gas goes into the fertilizer process, so that's critical for agricultural, food security, and also to reduce our reliance on petrol. As we begin to drive gas penetration into the economy, the expectation is you then reduce reliance on PMS, on diesel and all that. I know there's government, the CNG, the compressed natural gas initiated by the president is another key one. So, and it's critical for sustainability compared to coal or diesel. All right, so a few additional thoughts before I wrap up. I think it's nothing new again. There's been lots of advocacy, whether at Abu Dhabi last year COP, which of the COPs again. Africa needs to go its own path. The West can't tell us what to do. The only problem I keep telling people is we're only in this kind of quagmire because we don't have money. Just like Professor mentioned, you can't go to the Qataris or the Emiratis or the Saudis and tell them all this bullshit. They have money. They dictate their pace and tune, and they decide what they want to do. They don't go begging hand in hand, whether go to London stock market or go to New York or South Africa. They don't, because they're pretty much well fortified with massive sovereign wealth funds, massive finance. So they're able to actually take their destiny into their hand. As against us, we're still in like a begging nation, right? So we think gas will help with energy transition, help with decarbonization, and then the gas to power system also, you got to look at it end to end. I know sometimes we're attacked as gas producers that why are we charging so much for gas? And then the Minister of Power once said, can gas contracts not be denominated in Naira? All this bit, but you have to look at this end to end, from your reservoir where the gas molecules are stored all the way through the wells, through your process facility, till it gets into whether it's Dangote fertilizer plant or it gets to Azura power plant. You got to look at that entire end-to-end value chain and see if it makes money. Every segment must make money. If it doesn't make money, we can keep complaining and talking till the cows come home. Nothing is going to happen. So it's got to be end-to-end value thinking. And then all stages in that chain must work together. There's no point drilling a gas well if I can't get paid, right? And there's no point building power plants if consumers can't pay to DISCO. So it just doesn't make sense. So we need a major infrastructure investment. I'll say kudos to NMPC. If you look at all the work going on around the NGIC, so the Elps Loop, AKK, there's a really massive infrastructure which only government can actually finance. We need a regulatory framework. I won't go through. That's been a lot of talk. I think there's been quite a lot of improvement around the regulatory framework, to be fair. But regulators don't put money in the ground. It's investors who put money in the ground. And then good governance is also key. If you can't raise finance, if you don't have good governance, clear balance sheets, nobody's going to put money on you. So if you follow Seplat example, we're listed in London primarily to be able to attract funds. So when we raised the $650 million bond a few years back, it was easy, it was even oversubscribed. So once you have a very good asset base, clear strategy, good team, and also corporate governance, then investors can trust you and bring money and hope that they get their money back. Not that the money will end up on private jet or being stolen somewhere. And then the technologies around how do you offset. If you want to keep driving gas, I mean, investors want to see, okay, what you do to your CO2 greenhouse gas. How do you abate the CO2? Because gas is not 100% clean energy, but you can abate the greenhouse gas through tree planting, some bit of sequestration around the CO2. The last one I'd like to add is, at least coming back to the earlier discussion, so it's not just talk. So Seplat, in partnership with NMPC, working together, we have made a lot of investment in gas, and that's driving power. So today, in the West, we do roughly about 300 for Oben, and then Sapele comes on later part this year. Asset North, which is a business I'm looking at now, 300 million scope of gas into the market. That's about $600 million investment. If you add financing costs and all that, you notch towards almost $800 million. So this is no small money, right? It's raised through debt. Debt is about, I think, 260. Equity for 420. So it's possible. It is possible. So once Arsenal start production, hopefully puts 300 million scoff into the economy, that should be able to power 1.5 gigawatts. Depends on whether you have a closed or open cycle system. So we'll keep pushing. We're hoping we get the MPNU transaction that brings a lot of gas, another major gas to power opportunity. And then keep investing in upstream. So our model is very simple. We still need the oil investment to generate the cash, and then use the cash to fund the midstream business and also the downstream business. So Nigeria needs all that: exports, gas, local, domestic gas, for the system to work. So in summary, I've been able to share a few thoughts about the opportunities, blessed resources, but resources means nothing. Sometimes it's better not to have resources like, is it Hong Kong, or is it no, not Singapore, which country, that tiny country with no resource at all that broke out of Malaysia, and it's one of the richest country, Singapore. Singapore is the richest country today. So we can learn a lot globally. So overall, I'll say there's light at the end of the tunnel. Government is trying, really pushing very hard. But sometimes I feel we started a bit late, so it's just how to catch up. And then the world is also moved on. Capital is moved. Capital doesn't stay. Capital moves around the world, and once we can catch up, I think Nigeria will get back on track. On that note, thank you very much. Thank you.
Thank you very, very much, Engineer Efiongo Kon, Managing Director, Ano Gas Processing Company, JV of Seplat and NNPC. Real quick, I want to ask a question, especially to those of my fellow Nigerians in the room and online. If you were opposed to the increase in electricity tariff, if you were opposed to it, be honest, wave at me like this, you were opposed to it. You were opposed to it. Thank you very much for your honesty. Having listened to Engineer Okon, are you still opposed to it? You are still opposed to it? Wow. So how do you think they will recoup $680 million if, okay, let me put it this way. If you built a house, right, with 250 million naira, and in the next 60 years, you cannot rent in the house, you cannot recoup your $250 million. Or if you build that same house with 250 million, and in the next 10 years you can recoup your investment, which would you rather go for? I'm asking you. Which would you rather go for? Yes, you. The 10 years. Are you still opposed? Yes or no? Are you still opposed? You are still, okay. I hope we'll have time today or tomorrow to have a small town hall around, because see, you've listened to him speak. There's a comment he made that if we continue at the price that it is going, we cannot get the investments that we're looking for. If you go and take $1 billion from London or New York Stock Exchange, then we will not get it, because when they look at the fact that there is no, what's the word now, willing buyer, willing seller thing in the gas space, then they are not interested in investing. We need investment. We need to make small adjustments. But I'm not the expert. I'm your MC. Let me bring up another expert. One expert has spoken. Let's give him one more round of applause. I just thought I should highlight that because sometimes we argue those things, but it would be good if we make those arguments with, data and statistics for or against, wherever you stand on the divide, really. I'm going virtual now to a former director of operations, Ghana Energy Commission, and board member of PURC, Dr. Ni Dako Ashanti. Dr. Ashanti, confirm you can hear me? Good afternoon.
Yes, I can hear you. Good afternoon.
Fantastic. I'd like to see you. Okay, great. I've seen your slide. Awesome. Dr. Ashanti, you have the floor. Please take your 15 minutes now.
Thank you very much. And I'd also like to stand on the protocols already stated. And so I'll launch straight into my presentation. And thank you to Mr. Ekong for what he shared. I think he's made my work a lot easier. So one of the things he has done is to capture the opportunity. We know that we have widespread power shortages. We know challenges in Southern Africa. We have the famous doomsaw in Ghana. We have issues in Nigeria. Essentially, power is a challenge for us. In the midst of all that, we also know that there have been loads of gas discoveries in the past few years. And the estimates are that we have over 265 billion cubic meters of gas available. So clearly there's an opportunity to use the gas to meet the current electricity or energy prices. But unfortunately, there are some things which mitigate against us achieving that very quickly and in the short term. We've already heard a bit about the massive level of investment required. There's also the challenge that whilst the demand is there, it is somewhat scattered, and meeting that demand is a challenge in itself. Then there's the other issue which we ended on just now, which was essentially the creditworthiness or the sustainability of the power utilities, financial sustainability that is, where as a result of tariff and losses, they are not able to pay their costs. So why would you want to supply these utilities with gas if you are not likely to be paid? And then, of course, there's the climate issue, which is always floating around. When you want investments from the international market, there's this thing that they shouldn't be funding fossil fuels. So I'll focus a little more on the challenges, because to some extent the opportunity is clear, the motivation is clear. So in terms of infrastructure requirements, we know that the gas processing facilities need to be constructed. We've heard about what's happening in Nigeria, some of the gas plants which are being put in place. And there's also the transmission pipelines that need to be put in place. If, as an alternative to pipelines, you can also go for liquefaction to then send by boat. But all of these require an assured market for the gas, a sure market which will pay for these investments. So again, as has been alluded to, the funding can be made, but then who would fund something knowing that they would not get paid? And if they are not convinced they'll get paid, the money doesn't come. If the money doesn't come, the gas stays in the ground or is flared, which is even worse. And as a result, we all still continue in darkness, or at least those who don't have power remain in darkness. Apart from the gas infrastructure, we also require power infrastructure. We need to build those power plants. These are the power plants that will, not consume power, but consume gas. And so they need to sign these gas purchase contracts. And once those gas purchase contracts are signed, they secure the investment that needs to go into the gas infrastructure we talked about before. And then the power sale contracts also secure the investment in the power plant. So the power producer, if he's a private company, would want to make sure that he can sell his power before he gets or is able to secure investment to build his power plant. We also need to make sure that that power can go to the customers. We had the issue in Nigeria where we have a lot of stranded power plants. The plants are there, but they're unable to supply the power, so they remain somewhat useless. So anyone building a new power plant will want to make sure that his power can get to consumers who will pay for the power and therefore enable him to pay for the gas he's buying. So all of this is, again, infrastructure that needs to be put in place. And it requires an assured market for power. And in talking about assured market, we're also talking about people or consumers who will pay for the power that they'll receive. And that's critical, because you can have people who want the power, but if they're not prepared to pay for it, either because they feel it's too expensive or they rather choose to steal the power, then you have a problem. Nobody wants to invest in a business that he does not recoup his money. So we've talked about investment. We recognize that it needs a sure or an assurance of payment to ensure to unlock the investment. Then the fragmented power demand. As we can see, Africa, very often referred to as the dark continent. There are issues beyond the fact that we don't have the power. In terms of the infrastructure that is required to get the power to the consumers, again, when government does it, it's normally motivated by the development imperative. It knows that power is essential to growing the GDP, towards the well-being of its citizens. However, as we all know, most African governments are financially constrained. There are lots of things, whether it's health, whether it's education, whether it's energy. There are so many things demanding the limited funds that the country has. Added to that, years of borrowing and not being able to pay has put most of our countries into levels which put us in high debt distress or likelihood of debt distress. Ghana is, of course, under an IMF program as we speak. So funding out of the budget is somewhat impossible for most countries. The alternative is to bring in bilateral arrangements, barter arrangements, where somebody builds it, operates it for a while, and then transfers the infrastructure to government. And China has often been looked at as the last sort of willing bilateral partner to fund a lot of these infrastructure projects. But then we've also been hearing about the blowback where, when again, for the reasons which have been talked about, low tariff, losses, high losses, we are not able to pay, then there are clauses which could make the Chinese investor take over the infrastructure, and that has all the negative repercussions that we are all aware of. On the other hand, we can go private, which certainly works. They are motivated again by the market or by the demand for power. But then again, without access, there's no demand. And without demand, there's no motivation to invest. So you have this challenge where there are people who want power, but there are no power lines to where they live. So in order to unlock that demand, you have to put in the infrastructure. The private sector is more limited in their willingness to put in infrastructure to stimulate demand. And so we have this challenge where, which comes first, supplying the utility or stimulating the demand? In cities, it's not so difficult, but as we move more towards the rural communities, it becomes a greater challenge. And so this is the conundrum about fragmented power. But at the end of the day, whether it is rural or it is urban, if the end users of power are willing to pay for the utility, that always unlocks the investment. And as we heard, the MC was asking, willingness to pay is one of those things which people will rarely commit to being willing to pay a higher tariff. But again, that is an inevitable requirement. We can't run away from that. And I'll share a bit of my experience working in the Public Utilities Regulatory Commission in Ghana, where we had to set electricity tariff. But I'll come to that shortly. creditworthiness of power utilities. This is actually a major issue. Again, Mr. Ekong made reference to that. The loss levels of African utilities vary widely, but can go as high as 70% in some places, which means you're only getting money for 30% of the electricity that you sell. And I mean, there's no way you can make a business in that. So you have publicly owned utilities which are floundering in debt, and they are never going to be able to attract the investments they need to extend or expand access to electricity with such high levels of losses. So that's the major challenge. Then you talk about cost-reflective tariff. Now, the biggest part or challenge with cost-reflective is that when you are doing electricity tariff, the loss levels are part of the cost, because essentially, if I'm selling a commodity and a certain proportion gets lost, I will not get revenue for that. Therefore, the few people or the many people who are paying will have to, if you like, take the cost of the power that is lost. So essentially, the cost of power increases with the level of loss. Unfortunately, it's a vicious cycle. As the price goes up, more people steal, therefore the losses go up. So you are in a sort of catch-22 situation. The real challenge is that losses require, or loss reduction requires unpleasant actions like prosecution, like, well, first of all, looking for those who are stealing power and dealing with them in terms of the court process. It can be laborious, but it's also very unpleasant. And most governments are not keen on the sort of bad vibes that come from that. But if utilities are not able to collect the money for the energy that is sold, they will also not be able to pay for the investments that they have made, or even for the gas that they are being supplied with, which is very much the case in Ghana today. So in setting tariff, you have to sort of balance or weigh these two things. And invariably what happens is that you would set the utilities a target for their loss reduction. So it will not be all the way to what the current losses are, but it will be something that you feel the utility is able to achieve in the medium term. Unfortunately, what tends to happen is they don't take the actions required to reduce the losses. The losses continue to possibly increase. And so you have a situation where the tariff is not cost reflective, but even gets worse. So this is a sort of catch-22 situation that many utilities are faced with. And the only solution that has been tested in many cases is privatization. But then that begs the question, if you privatize a utility, they are going to do the very thing that the public sector was unwilling or afraid to do. So why not do it rather than hand it over to the private sector? But that's a question for another time. So the creditworthiness is a key challenge. And it goes down to our willingness as citizens of various countries to pay for the cost of power, and also, if you like, to denounce those who steal power or bypass or do whatever it is, such that our costs should go up more. Because for every person who steals power, you, the one who is paying, end up paying for that stolen power. So it really needs a change of attitude from our own citizens. Lastly, I'll talk about the climate objection, and that this is also something that has come up somewhat in the discussions today. Very often we say, we in Africa haven't contributed to the climate crisis, so why should we be required to make the changes? Unfortunately, we will require finances beyond what is generated on the continent in order for us to do what we are all saying is necessary. The investment in the gas infrastructure, the investment in the power infrastructure cannot all come from the continent of Africa. We need some international funds, we need bilateral funds, we need concessionary funds. The challenge is that there's a very strong push against investments in fossil fuels. And you just need to type in Google and look at fossil fuels investment or climate and climate change mitigation. And you see so many agencies, NGOs pushing and working hard to discourage governments from funding fossil fuel investments. The recent COP was mentioned, and certainly that happened there. But whatever the case, Africa will remain a minor contributor to global emissions. We are not going to suddenly be a major contributor, even if we continue in our plans to use gas to power our economic recovery. The IEA recognizes it, but it also says we need to do far more to adapt to the climate risk, because the consequences of climate change will affect us. So much as we are not the cause for it, we do need to address it directly. And gas does provide us with a positive message. We are not talking about increasing our per capita necessarily production of climate gases. So when we move from heavy fuel oil or light crude oil for generation or diesel for generation to gas, we dramatically reduce the amount of CO2 that we are releasing to the atmosphere for every kilowatt hour of energy produced. So we need to put a strongly positive message and to push the agenda for gas-fired generation or gas to power as a climate mitigating action, and to demonstrate that for our contribution, we would be looking at moving away from heavy fuel oils or diesel for generation, and that we need the gas to do so. Certainly in Europe, they recognize the role of gas as a transition fuel, helping to drive renewables and so on. But we need to grow our power consumption. We need to grow our power supply. So inevitably, we would need to also grow our gas-fired generation. But we need to make these positions much more concrete, rather than as an objection in the sense of us saying we didn't cause the problem. And I believe we are doing that more and more, but we need to make that even more clear to the general public and also to the, should I say, international opinion, because that is often what drives governments and foreign agencies. It's true that we know the truth, but we also need to disseminate it. So those are the major objections, issues that need to be dealt with. We know that Africa needs energy. We need energy to grow. We have low electricity access. It restricts our growth and prosperity. It restricts outcomes, whether it is health, whether it's education. It has a major impact on everything that leads to development in our countries. So if we don't move to more a higher level of electricity access, the use of wood fuel for cooking and highly polluting fuels for lighting like kerosene will continue. And therefore, we need to be able to show that our low penetration of electricity is actually negative on the climate. We need to show that by doing more gas-fired generation and increasing electricity access, we are contributing towards climate mitigation. We recognize that increasing electricity access will also require increased generation, but that the low cost will also be essential for access. So immediately starting off with renewables could be, well, renewables backed by battery could be prohibitively expensive. And that is why we would need to really push for the gas to power. Currently, there's a lot of liquid fuel used in generation, as we said, whether it's diesel, whether it's light crude in Ghana or heavy fuel oil. The replacement of that with gas is definitely a climate positive action, and that needs to be stressed. So gas to power projects require massive and sustained investment. We've seen some of the numbers projected at 100 billion a year. The key thing I want to say, though, is that it requires cooperation between the private and the public sectors. And that's possibly something we've not done too well in Africa. There's often a little too much suspicion of the private sector within public sector players, a fear that they're making too much profit. And therefore, we need to re-establish the motivations for investment to make sure that the private sector is properly motivated, but also not allowed to make excessive profits at the expense of the public or the people. So well-planned coordinated action is required. We've heard a few of those initiatives, but the key thing for me is that we have to be demonstrating positively that our push for gas is a climate positive response. Now, I just want to end with a small example of something that has happened in Ghana recently. You may have heard of Gensa Energy commissioning a 110-kilometer natural gas pipeline. Now, the backstory to this is that essentially Gensa was essentially a power company, or is primarily a power company, supplying power to industry. So their prime motivation was to find a cheaper way of supplying power to mines which were far away from existing electricity supply. And they started off using liquid fuels to power the plants that they constructed at the mines, with a clear agenda to move the gas that was on the shore to these power plants to enable them to lower the cost of power to the mines. So their motivation, again, was clearly a power project and reducing the cost of power to their customers. But as a result, they've built a pipeline which is available to the country as a whole, and this pipeline has been extended even beyond their own power plants. And this is the example of where private and public sectors can work together to provide assets for the national good. So what I'm really advocating for is greater cooperation between the private sector. We can't forever assume that we will need to have cheap power for ourselves without recognizing that the private sector will also need to finance the investment that they make. So going back to what the MC said, I believe it will be necessary for us to recognize the need to pay for the real cost of power. And that's where the regulator comes in, because the regulator makes sure that the private sector does not, should I say, make excessive profits. And so we need to recognize that role between the private and the public. That's the room for regulators. Thank you very much.
Thank you very much. Before I let you go, I'm sure if we'll have time later at the end of all the presentations, we'll take some questions from the audience. But I want to ask you, sir, do you mind sharing with us how much it is, how much power costs in Ghana per kilowatt hour, how much in US dollar terms, so we can understand? Do you have that figure right there, or is something you want to share with me?
I mean, it varies. It doesn't, everything depends on where the power plant gets its funding from. So if the funding is expensive, the power will be expensive. So if the plant is expensive, the power plant will be expensive as well.
Okay.
Unfortunately, the nature of it is that the best way is to do competitive procurement where the companies have to compete against each other. But we've had power plants ranging from 12 cents per kilowatt hour right up to about 15, 16 cents per kilowatt hour. Bear in mind our gas is more expensive in Ghana than it is in Nigeria, so that factors in as well.
All right.
We are talking about gas at 8 cents per megawatt hour.
All right. Thank you very much. We're looking at 12 to 15 cents. Thank you. Thank you very much. Please give him another round of applause. Thank you so much, Dr. Ni Ashanti. Thank you. So if you stay with us on the call, if we have the time, we'll take some questions from the audience for you. Thank you, thank you, thank you. Please, let's give him one more round of applause. Thank you. Okay, so we're moving straight to our next presenters, and this time, I'm still virtual. I said presenters because there is more than one of them presenting from their particular company. So we are leaving the shores of West Africa right now. We're going all the way to North Africa again. We were in North Africa earlier today, where we interacted with the DG of the Moroccan Hydrocarbon and Mines Company. And now we're moving over to North Africa again to have a conversation, or listen rather, not conversation, listen to the representatives of Schneider Electric in Egypt. Now there are three of you. I don't know which of you is going to be kicking it off. There is Mr. Hussein Ibrahim, Vice President Energies and Chemicals, Africa for Schneider Electric. There is also Ibrahim Ahmed Nasir, and there is Ahmad Gamel, all of Schneider Electric Egypt. Good afternoon, gentlemen.
Yeah. Good afternoon. How are you?
Very well.
It's my honor to be here.
So
yeah.
Who am I talking to?
Yeah, sure.
Oh, nice. So what's the name, sir?
Sorry, can you repeat again?
No, I'm asking your name.
This is Amr Ibrahim, Schneider Electric.
Fantastic.
We are based in Egypt.
Great.
I am part of the digital team, and
Great.
I have here my colleague,
Great.
Ahmed Gamel, as well.
Fantastic. So please take it away, you and your colleague. Your presentation
Sure.
starts now. Yes.
Please let me know when you see my screen.
Yeah, it's beginning to come up. It's loading. While I'm waiting for it to load, do you mind sharing with me as well how much power cost in Egypt per kilowatt hour in US dollar terms?
Okay, so far it's not expensive too much, but actually there is a big plan for Egypt, for the governmental, to increase the price for the kilowatt. Currently it's 1.5 EGP, it means like 10 cent. 10 cent.
Oh,
Yeah.
okay. All right. Thank you very much. I hear you say there's plan to increase it, and at the end of the day is to keep the business sustainable. Let me not take any more of your time. Please, your slide is
Yes.
up. You can begin your presentation now.
Yeah, first of all, many thanks. It's really my honor to be part of this event. So today I would like to discuss with you and talk about the industrial technology for sustainable impact. But before I go through my presentation, I would like to run one video.
The world is
to
full
show
of
you.
people telling you who to believe they are. Well, we thought we'd tell you who we're not. Let's start here. We're not in shipping. We don't make lifts. Seriously, no lifts. We do this. We're good at this. And we make all of these. And even though you'll find us here and here, we don't make energy. We make you save it. Which is just one way we help you make an impact. Are we an internet company? Well, we connect and power just about everything around you. Helping machines talk to each other and to you. Making your world more personal. We're seeking out the big questions and answering them honestly. Like, how can we make the most of our energy and resources? Or can we make access to energy and digital basic human rights? We're real people, employees, developers, partners, investors, and inventors, all passionate about making an impact. We're open. Humans of all sorts from all over, learning from each other and about each other. We're not here to save the world. It'll go on with or without us. We're here to be your digital partner for sustainability and efficiency, to ensure life is on everywhere, for everyone, at every moment.
Perfect. Many thanks for your time. So my topic today is related to industrial technology for sustainable impact. We are transforming to be the industrial technology leader. This is a transformation that positioning Schneider at the forefront of technology advancement. It's enabled us to drive efficiency and innovation and competitiveness as well. But it must be sustainable and must have the right impact. More importantly, it's about looking forward to what's possible next, what we are calling the next frontier. Megatrends. Today, I want to walk you through 5 megatrends, actually for the time constraints, so let's take like a 2 megatrends that are reshaping our world and what it means for the future of our business. These trends will demonstrate that we have even more opportunities in front of us to accelerate our growth and go for transformative growth. Let's look at them and you will see how we at Schneider can help to create solutions that shape them and how they as well will shape Schneider. So, first one is climate change. The biggest challenge of our generation and something we have talked about it for a long time. We as Schneider talk about this many times. We know that we need to accelerate action 3 times faster to address this climate change. Why we want to do this acceleration 3 times faster? Because we have in all this world, we have 8 billion people on the earth today. And close to half of these are living in places that are highly vulnerable to climate change. Climate change is impacting almost every corner of the world now. Floods, typhoons, cyclones, and everything. Few that you would have seen yourself. And in 2023 was the hottest year on the record. That means in 2024 we will have more hottest. There is no doubt anymore among the correspondents and politics that climate change is something to be addressed, and we need to help with our solution to work against further global warming and driving down CO2 footprint. This is the most important part. We need to optimize the CO2 emission. This is our message actually as a Schneider. Okay, while consequently are raising, so are the commitment for change. It was very good to see that during the COP28 in Dubai last year, over 120 countries pledged something very important to double energy efficiency by 2030. That has been something we have been also driving for many, many years. So that will cause a good potential for us to help many of the companies. Also, I would like to highlight that the business community is active now. Latest count, closing to 3,000 companies have signed based on the net zero commitments. And really, that's really nice and good start that we have 3K companies are signing for zero net carbon. Also, I would like to highlight the second point is digitization and artificial intelligence. How do we do this? As you can see, digitization is at the center of it, and this is the third mega trend that accelerating of digitization and AI as well. We talk about it for some time with evolution of life cycle management. We are at influence point of never seen before accelerating. Really, it's never seen before. Just, I would like to highlight one thing, because we cannot enter any discussion without, in these days, without talking about AI. We believe that AI will be the biggest than the World Wide Web. Just to let you know, 100 million will reach 100 million for the web grow in 7 years. However, you can see now in artificial intelligence generation, we just need just 2 months. So you can imagine our future. We believe AI will be the bigger than the World Wide Web. These last 12 months have seen an explosion of large language models like ChatGPT, of course, you know about it. The adoption rate that we see of generative AI is unprecedented. Within 2 months of the introduction, 100 million people start using it. Hope you can see now how we are facing. It will also drive data center demands, which I will talk about it later. Now, of course, with this many more people and this much more demands, we need to drive decarbonization. And the good news that we have the technology to tackle this. We have the technology to optimize this carbonization. Most of that on the demand side, so in a building, in an infra, in a data center, in industrial, in oil and gas as well. 70% of CO2 emission can be removed with the existing technology, but we have to release the role play by energy demands. For a year, conversation about the energy transition have focused on replacing our supply with renewable sources. But more than half the work that is needed is on the demand side, using a digital and electrical technology. Last part, I would like to talk about digital and electricity. Just two parts equal sustainability. On this part, we just talk about digitize everything, digitize our assets, digitize our data as well. Once we do that, we will move to the sustainability, green and smart, which mean for our electricity as well, we add our significant innovation and proven expertise in the energy. In energy, we are a clear leader holding the #1 position across the world at all. Last but not least, before my colleague join, this is what drives us our proposal to clear impact by empowering all to make the most of our energy and resources, bringing progress and sustainable for all. We call this life is on. This is our slogan and this is our style now that we would like to enhance. It's what motivates us to deliver our mission, to be the trusted partner for a sustainable and efficiency for our customer. Let's look at how we can make this happen through our set of software. We have a set of softwares to achieve this equation by my colleague Ahmed Gamal. Ahmed Gamal, floor is yours, my friend.
Hello everyone. Can you hear me?
Yes.
Okay, I will share my screen. Please let me know if you can see my screen.
We can hear
Yes,
you.
we can see you.
We can see your screen, but
Okay,
not
great.
your slide.
Hello everyone. Hello everyone. This is Ahmed Gamal from Schneider Electric team, and I'm very happy to be here with you. I would like to take the chance to thank everyone who participated in organizing this event and giving us the privilege to work for the future for our continent and give access to the clean energy for everyone who is living there in Africa. So I will be here with you to present you some a smart solution that is provided by Schneider Electric for the gas distributions and transmission systems. So everyone, previously we were talking about the challenges and the risks and everything that is challenging for the gas distribution and transmission. So we are here, I'm lucky to be here to present some solution or to present some system that can help the utilities and the gas distribution companies to overcome those challenges. But firstly, I will talk about the challenges from our point of view from Schneider Electric. So, firstly, I would like to answer a question why Schneider Electric sees that it became essential to have a smart system that is using the latest technologies and using the artificial intelligence to manage the transmission and distribution of the gas distribution, to manage the gas distribution and transmission. So to answer this question, let's look at the main functionalities or the main tasks that the companies are responsible for, the gas distribution companies. What are they responsible for, and what are the key functionalities that they are working on? Firstly, they are providing the access point to a gas supply system to each and every customer, or homes to the different customers. So it's a very critical thing because it requires a very huge infrastructure and very huge network and very complex network. And while we are talking about customers, we are looking for a reliable service, a good quality service. So for the gas, we are responsible, or the gas companies are responsible for enabling an interrupted supply of gases with a safe service. So while we are talking about gas, so we are talking about a safe service, and while we are talking about safety, so the engineers and operators for the gas distribution companies are handling the very toxic gases. They are responsible for regulating the pressure along the network. All the network the pressure should be regulated on all the networks. So they are having a very complex task with this. After this, the metering and billing. It's very important, and we were talking about the quota for the gas and the electricity. So the metering and billing is something important and very complex. But when we are talking about the metering and billing here, we are talking about. I would like to take it beyond this. We are having the data from the metering and billing. We are having a very extra large data, so we can use those data to manage or to have a visibility and observability on the consumption of the customers, the behavior for them, and it's opening rooms for optimization and maybe reducing the generation and handling the consumption for the different customers. The maintenance, it's something very important because it touches the safety of the people. So we cannot leave a corrupted asset on site because it will be damaged and it will cause huge problems or major accidents. So the maintenance for the gas networks is very critical, and we are supporting on this part. And last but not least, the emergency response. And when we are talking about emergencies, we are talking about accidents. It can be emergency accidents, it can be leakage, it can be interruptions for the customers. So how we support the operators in the control room to overcome these accidents or these emergencies. And after this, we had a look on the challenges that are facing the companies to achieve their goals, the goals that we have mentioned now. Firstly, the infrastructure modernization. So many distribution systems are aging and requiring significant investment, and also the extensions. We extend every day, so this is a very challenging thing. Also, the demand variability and maybe the fluctuating demand patterns, especially in the seasonal, the consumption in the summer, it's different than the winter, and we don't have access to data to manage this. So we are supporting in this. We are having access to the data, and we are managing the demand variability and the constant changing of the assets. The asset is now open, tomorrow it will be closed. The state of the asset, is it good, is it bad? So this is something, or data, we cannot access it without using a smart system to support us on this. Next thing, the safety and regulatory compliance. So we should comply with the safety, environmental regulations. This is a major challenge and require continuous monitoring and maintenance and investment in our safety measures. The next is asset management, and we need to take the most out of our investment. We take the most out of the asset we invest in, or we pay money in it. We need to take the most out of it before it's rolled out or it's just completed its life cycle. So we need to take the most out of it. So the asset management is very important, and the assets includes the pipelines, the compressors, or storage facilities, and etc. The environmental sustainability, and we need to balance the need for natural gas with the environmental sustainability goals, including for sure reducing the emissions from the gas and the impact of the gas distribution operation. Last but not least, the customer expectations, and they are evolving, and they are expecting an affordable service while keeping the safety and the sustainability and transparency in mind. So those were the key challenges that we were looking at. So Here comes the AGMS, a smart solution from Schneider Electric, and it's built on the top of the platform ADMS, Advanced Distribution Management System, and this solution for the electricity. But the Advanced Gas Management System, it's our system for the gas distribution, and it's provide a full digital experience for the control room. It's an integrated control room software, and it's providing the full digital experience for the control room. Also, it operates as a digital twin of the natural gas under one network model, and it's a GIS-based or geographical information system. So this is something powerful in our system. And the digital twin enables the topology processing and gives the awareness for the operators in the control room to see everything happening in the network. And it exposes a rich set of interfaces that can be, it makes it integrable with all third parties, such as GIS, simulation, ERP systems, something like this. So what are the value streams that comes with the AGMS? With AGMS, we firstly need to achieve the operation efficiency. And to achieve the operation efficiency, we use the very flexible and scalable platform. We use the new generation SCADA. We use the measurements that comes with the SCADA. We use the digital switching, and this digital switching, it supports the operator and tell the operator what are the consequences of everything that he will do or she will do, and the model management functionality that uses artificial intelligence. So those are some functionalities that helps us to achieve the operation efficiency. After this, we need to achieve the reliability and resilience for the network. So using the integrated outage management, and this outage management helps the operator to handle all the incidents that happens in the network. And using the advanced switching management, it's just makes the role for the operator, and the fault location and leak detection functionalities. It helps us to achieve the reliability and resilience. And to achieve the grid efficiency, we use the monitoring and prediction analysis, forecast functions, and the automation. Everything, those functionalities helps us to achieve the grid efficiency. Last but not least, the grid flexibility, and we use the what-if scenarios. We simulate the future state of the network. We use the optimization to take the most out of the assets, as I said before. So we achieve the grid flexibility by using those functionalities. And the good thing, those functionalities are all under one platform. Like unlike the old systems or the legacy systems, we are handling all of those functionalities under one platform, under one infrastructure, under one network model, and under one database. And it's like a puzzle, as you can see on the left side. This EGMS, you can add whatever you need, and you cannot add, you can remove whatever you don't want. So, for example, here we are adding the topology analysis and the gas transport functionalities, network analysis, forecast functions, outage management, SCADA. We are adding everything under one platform, and we can add to this the integration with the third-party systems. So under this one platform, you can integrate as well with the third-party systems like the GIS, like the simulation system, like the weather data, like asset management systems. So everything is under one platform, and this is the powerful thing with that comes with the EcoStruxure AGMS we are talking about here. And to summarize all of this, our solution, it comes with a long list of functionalities like SCADA, integrated model, time travel, and component tracking, what-if analysis, operation. I will not mention everything. You can see all the solution functionalities or some examples from the solutions. And on the right side, the values that comes with using the EGMS. It increases the operational efficiency. The total cost of ownership is reduced. It increases the overall operation quality. All of this under one single network model and under single platform. We provide the monitoring and control from the geographical view, from the maps point of view. It is easy to integrate and easy to extend, and it's robust, scalable, and secure. And that's it for the AGMS. Thank you for listening, and I hope it was good.
Yes, it was. Thank you very much. Thank you.
Thank you.
Okay, let's complete the technical presentations with an on-site speaker. Let's complete the technical presentations with an on-site speaker talking to us on smart gas grids for sustainable energy delivery. He's the manager, fuel business, commercial, Ghana Volta River Authority. I'd like to welcome Mr. Obed Opoko. Please a warm applause as he makes his way to the lectern. So, I'll wait a bit for my slides to be loaded. I think I can proceed as the technical team work on putting the slides up. So we heard from our brothers from Egypt who help us to see what technology can help us to bridge the gap when it comes to sustainability in delivering solutions to the African countries. Now, basically, we want to look at so come from Ghana, I completely understand. So basically, our friends from Egypt help us to see very specifically how their digital solutions is revolutionizing gas transportation and distribution. Basically, my presentation is more regional and global in scope. We want to see how we can use smart grids to solve current and emerging challenges in our space. And our focus will be more on the West African sub-region. So basically, we are going to look at some of the advantages that will derive from smart grids, look at how it contributes to sustainable energy, and then we'll spend a little bit time on the challenges we have right now and what we can use smart grid to achieve. And in focusing on that, we are going to look at how to Africanize emerging technology, because sometimes technology that are being implemented out there cannot be implemented en masse in our countries because the challenges are different, our social political systems are different, and so that we make a mistake in migrating technology and trying to implement it without tweaking it. So we like to see how best we can also, as it were, Africanize this emerging technology that is taking hold of the world as we speak. So we want to move to the next slide. So in talking about smart grids, we want to first focus on what it is not. So basically, when you hear the word smart grid, maybe it stimulates your imagination to think about something out of this world, otherworldly infrastructure, but that's not what it is. It is not talking about a bespoke technological invention. Oh, okay, sorry. So there is not something of a novelty that is being implemented. It's not a bespoke cutting edge technology that we haven't seen before. Neither is it a fanciful infrastructure. Basically, what is it? So if you take a look at the next slide, you see what it is. So basically, it is the existing gas infrastructure that is delivering value as we speak. However, we want to see how best it can be enhanced using emerging technology. So what technology are we referring to? So we are looking at using smart sensors, actuators,
and deploying them in critical areas to harvest data. Now, harvesting data is just one step in making sure of getting the full value of this technology. The other aspect is how do you analyze this data, and how does it help you in decision making? And decision making here can be real-time decision making and proactive decision making. Most of the time in our industry, most of our interventions have been firefighting, because things happen, then we go back to the drawing board trying to see what we did wrong and what we can do to improve. However, if you have data that can help us to be predictive, then we'll be ahead of the problem, devise solutions that will help us to do so. And that is exactly what smart grids does. So it helps the existing gas infrastructure to be sustainable, efficient, and also, most importantly, to also address safety concerns, and then allow for integration of renewable energy sources. So this picture here just is telling us how the landscape for delivering gaseous energy is evolving out there. So we don't have only traditional natural gas that is being fed into the pipelines. We have biomethane, or what people call biogas. Many people are doing a lot of, there are a lot of activities around Africa that is generating a lot of biogas. Surprisingly, a lot of these gases are either fled, vented, or not used optimally. So a way of utilizing this can be done using the smart grid approach. We also have diversifying our sources with LNG that is also in there. And then what is happening is, how do we include renewable sources in gas to power applications? And in this regard, I would like to give an example of Ghana, where just last year in October, we had a spill of our biggest dam, which sits on the Volta Lake, which is the second largest man-made lake in the world, with over billions and billions of cubic meters of water. We needed to spill because of a number of factors, which include rainfall and also underutilization of the lake. Why? Because we had gas sources that we wanted to prioritize, so we're using a lot of gas resources and reducing the drafting of the lake, apart from the heavy rains. So because of that, then we had too much water sitting behind the dam, and the only way to save the dam, because per our simulation, we realized that if the water tops the dam, the whole of Accra will go. It will just be, and this environmental disaster, no one was prepared to experience it. So we took the hard decision, the bitter pill, in allowing a lot of water to go downstream, flooding a lot of our community downstream, which brought all kinds of brouhaha in Ghana. So basically, I think there should be an optimal way of enhancing our utilization of gas, also by considering existing renewable sources and emerging renewable sources. So if you have such an infrastructure that does that kind of an analysis for you, and does not rely on a human being to sit down and make those decisions, then that will optimize the way we handle these resources as well. So let's look at some key features. I don't want to talk too much about the digital infrastructure, because our friends from Egypt have already done that. So I want to focus a bit on the management systems and how it helps to drive sustainability, efficiency, and also reliability and safety. So basically, with these devices, they can be quite unobtrusive, meaning that you don't need a lot of ancillary infrastructure to make it work. They use nanotechnology, where they use very little energy, so they can be self-powered for many, many years. So you have smart meters, smart sensors, all these are powered using very, very minute technology, and because of that, it doesn't attract a lot of attention. So you can have these devices installed in your network, and no one will know that they are there, and they are quietly harvesting data, sending it to the beehive, where the data is analyzed, and it helps you to do what? I'll just talk about a few. It helps you to do proper pipeline inventory analysis, help you to be able to gauge demand crests and troughs, and then helps you to see whether or not there's an optimum time for maintenance activity. And one of the key issues we have in our network is, when do we do maintenance? Sometimes maintenance are structured in such a way that they cause more harm than good. Of course, there's a safety critical aspect of maintenance. So when the industry players are crying that they need time to maintain their equipment, and they pull the safety critical card, everybody backs away, because no one wants to be responsible for any issue, right? However, sometimes when it is not aligned properly, then it has this socio-economic impact that is very difficult to arrest. It might have far-reaching impact on the ruling government and all that. So how do you determine when to do maintenance and what to do maintenance on? Because things can fail, and what is important is that if you can preempt the critical components in the network that are about to fail, and you go and arrest it, and then determine when to do it, there is much more cleaner way of handling maintenance than waiting for it to fail, and then you need to do a forced outage, and then no one has planned, and then there will be ramification downstream to consumers. And then lastly, we talk about how to integrate with renewables. So in integrating renewables, what is really happening is that if you have the platform where you have various gaseous fuels entering into the network, be it hydrogen, biomethane, and also renewables on the gas to power side, like PV, wind, which are all coming up, how do you balance that with your existing gas resources? So if you have an infrastructure in place that is harvesting data, providing you with the optimum time where you can reduce offtake of gas resources, and also send signals to the suppliers of gas to back down supply, so that you have more renewables coming in, or to make sure that the system is more sustainable. Okay, and what is important in this regard is the use of storage, and that is something that we find lacking in most African gas network. There is no storage. The only storage that we have is the pipeline. However, using pipelines as storage has its own issues, because people are still connected to that pipeline. So how do you store gas when people can have access to it whenever they want? But if we can really leverage on our geography, and I'm talking about it from a regional perspective, not from a country-specific perspective, we might have geographical features in other sub-regional countries that allows us to store gas safely in large quantities. In Europe and America, they have spent gas fields that they store gas. They have salt caverns. They have other formations. Maybe in Africa we can find our own way of storing gas, because it's very, very critical to do that, because in order to optimize renewables, sometimes we need to still produce the gas but store it. Store it so that when you need it, you can bring it back and then use it. What is also important about smart grids is that they link seamlessly with protection systems. So you have safety critical systems that are working to protect your network, and sometimes their operation are left to the human beings who are, as it were, in the control centers. However, if you have smart grids feeding critical information to these devices, they can act even without human intervention and save you millions and millions of dollars in terms of damage, abatement, and all that. So basically, we talked about some of the advantages already of smart grids. What I would also like to add is that with smart grids, it helps you to better manage your infrastructure. However, it also provides you with a platform where you can incorporate emerging technology. Our systems are very rigid and robust that when they are emerging technology, it takes a long time to adjust, to accommodate this technology because it's very rigid and close. However, if we transition to a grid that is smarter, then it is very easy to add on emerging technology, and that helps you to make progress because emerging technologies are designed to be more sustainable than the previous technologies. So the more you are able to use emerging technologies, the more sustainable your whole infrastructure is. So on focusing on sustainable energy, we have already talked about how it interfaces with renewables. We want to talk about how it helps us to also be more active and proactive than being firefighting. We need to make sure that our system is resilient and flexible. How do we do that? Our existing physical systems can be enhanced with the technology that is needed to help us make decisions in time. And then most importantly, it helps us with demand dynamics. What are the demand profiles of the offtake? We might have data that we use on the operational level. However, because we are human beings and we are limited in our data processing capacity, we need a system that helps harvest data and uses the data optimally to help us to make good decisions. And this helps us to better manage our line pack and also help us to efficiently use our limited gas resources. What is so heartbreaking about us in Africa, especially West Africa, is that whilst we are preaching about energy poverty, the little energy that we have, we are also wasting it. So you'll be surprised the kind of waste that is going on with the little constrained supply we have. So in order to even bridge the energy poverty gap, we also need to know how to better use our limited resources to deliver our mandate of supplying cleaner energy in terms of gas to our stakeholders. So what are the challenges that we will face if we are trying to implement smart grid in Africa? Now, the first thing is, of course, the cost and investment. I think we have talked a lot about investment costs, and I don't want to belabor the point. However, what I need to I want to talk about is the fact that in Africa, when we have emerging technologies, we need to see what works for us. So scoping and phase implementation here means that how, after identifying all the advantages of smart grids, what will work for you? It's not every component of the smart grid system will work for you. So we need to have that fit for purpose determination. When you do that effectively, probably even the cost will come down, and then we will limit our engagement with stakeholders. We also have how to integrate the complexity of smart grids with system stability. Typically, the saying is that do not change what has not been broken. So if the system is working, although with difficulties, the challenge is that when you are bringing something new on board, the fear is that it's going to disrupt everything. So how do you create that balance? And also, we are looking at technical challenges and how to overcome that. We need to have that conversation of what smart grids are, what are the gaps we have now. Because in Africa, sometimes when we are implementing a technology, what really is a drawback is that there's lack of knowledge. And when people do not know what it is, what the advantages is, what are the drawbacks, what are the mitigating steps, then implementing becomes difficult because there is resistance. So we want to see how best we can overcome that by educating our people. So that will involve a lot of skills development and capacity building. Lastly, I want to talk about regulatory challenges. Now, for this to work, we need our regulation to be tweaked to be smart grid compliant, because without regulation you cannot integrate smart grids into our networks. So we need to take a look at our regulation to see how best it can integrate into the smart grid. And when we do that, then we can also use the same smart grids to enforce regulations. Because what another issue we have on our networks is that we might have all the fanciful regulations that tend to guide and protect end users and also suppliers, but when it comes to actual compliance is a challenge. And although I'm living in Ghana, I'm very interested in what happened on the Alps, because Ghana receives about 25% of our gas from Nigeria, and we are always interested in what happens on the Alps. So unfortunately, we know all the issues too on the Alps when it comes to the enforcement of your network code. So you have a very nice network code that, when enforced, there will be a lot of discipline on the Alps, but it's not being enforced. It's not being enforced because of socio-economic, socio-political issues, and also sometimes you also don't have the devices to drive enforcement. So if we can have a smart grid approach where these are done without human control, then it's very easy for the human being to devolve himself from the decision making when he is not there, and so he's a machine. It's very difficult for you. So then, of course, the politician will not come and attack you. So this is a system we have put in place. The system is just implementing the protocols. There's nothing we can do about it. So this is a very key intervention that can help us to actually drive home our protocol that we have put on paper, but it is not working because of all the issues we have in Africa, which I don't want to get into. So to end, I'll say that smart grid approach is a very innovative way of ensuring sustainable energy. However, as Africans, we need to always be pragmatic. As Deng Xiaoping said, he says that whether the cat is black, white, or green, as long as it catches a mice, it's a good cat. So for us, what works for us is what we pursue, not aligned to a particular ideology or technology. So when we take that approach, then we will be able to pick out things in there that will work for us, and then throw away things that will not work for us, so that we will get the value and also get a win-win situation out of this emerging technology. Thank you.
Okay, so that's the last presentation for our technical presentations. That was taken by Mr. Obed Opoku, Manager, Fuel Business Commercial, Ghana Volta River Authority. We're going to move on now. We're going to move on to the final panel session for today, final talk for today. We adjusted the program a little bit. I know all of you have a copy of the program, but we did make some adjustments, and I think you will understand and appreciate these adjustments that we have made. It means that following this next session that we're going into, we're going to go serve you lunch, and once you've had lunch, you can proceed to your other business for the rest of today, and we'll reconvene tomorrow morning at 9 a.m. We're going over to the policy forum. This is the first forum on policy. We're looking at creating an enabling environment for gas technology development and innovation in Africa. We'll first take a keynote presentation from the authority, after which we will then invite the panel members and the moderator to do justice to the discourse. Some of our panelists are, of course, online as well. Before I get there, however, I want to take brief remarks from one of the collaborating associations, the Nigerian Association of Energy Correspondents. is on, their chairman is online and would just take the next 3 minutes to have a goodwill message for us as part of the collaborators for this exercise. So, Mr. Ugo Amadi, if you can hear me, please say something.
Okay, thank you so much. It has been a very wonderful time in this conference. And I want to thank all the captains of industry present and the government authorities and everybody that has been part of this August conference. It's indeed a unique gathering of energy industry professionals in the continent. And it is great excitement and profound sense of responsibility. I represent Energy Correspondent of Association of Energy Correspondent of Nigeria at this summit. I want to let you know that NIEC is one of the notable professional media associations in Nigeria with focus on advocating for efficient reporting activities in the broad spectrum of the energy sector with a view to bringing the real issues across the industry to the limelight and providing data to help government operators, investors, and make informed business decisions. Interestingly, this summit will undoubtedly enable us as one of the key collaborators in this Agis to explore the huge opportunities in the Nigerian gas sector and the potential that can unlock and create an enabling environment for gas technology development and innovation in Africa. We want to emphatically state that the battle of Agis by SPE under the theme Igniting the Future, Driving Sustainability in Africa and Energy Landscape through gas technology and innovation is not only timely, but the best thing that has happened in industry at a time like this. Distinguished ladies and gentlemen, today we gather to discuss and deliberate on pathways and to share insight on how collective energy future as we progress through an era of unique challenges and opportunities in the sector. We are not unmindful that Africa's and Nigerian energy sector is facing several challenges, which include but not limited to inadequate infrastructure, power generation, transmission, and distribution capacity, lack of policy consistency, frequency changes in energy policies and regulations, which create uncertainty for investors. On energy access, many Nigerians lack access to reliability electricity, with an estimated 40% living off the grid, insufficient incentive and regulatory hurdles that discourage private investments. All these concerns and also about energy security, particularly in face of rising demand and declining domestic production, is also well noted. Inadequate funding for energy projects and programs, political and regulatory framework, weak institutional capacity, corruption, and political interference hinder effective policy implementation. Therefore, as an association, we believe that addressing these challenges is crucial to develop a sustainable, efficient, and inclusive energy sector in Nigeria and Africa. However, stakeholders are calling for a proper review of PIA in order to unlock Nigeria's vast hydrocarbon potentials and attract investments and propel our nation towards greater economic success and shared prosperity. Ladies and gentlemen, permit me to note that as an association, we are committed to advocating for a just and equitable energy security for Nigeria and Africa as a whole. We are also dedicated to telling the gas story in the most compelling way possible and support the implementation of the Nigeria Decade of Gas initiative. We are calling on all stakeholders and government to ensure they create an enabling environment for gas technology development and innovation in Africa, which requires a multifaceted approach. Some of those result-oriented approaches include, but not limited to, government policies that encourage investment in gas technologies, innovation, and strengthening institutional and human resource capacities in Africa, collaborating among government, industry, academia, and entrepreneur community to address challenges and opportunity in the gas sector. Also, there is need to promote digital technologies such as blockchain digital platform as marked to achieve new energy production and consumption model, encouraging technical, vocational, and tertiary education and training in science and technology, engineering and mathematics, enhancing cooperation to strengthen tertiary education system and increase access to online education in areas related to sustainable development. Ladies and gentlemen, as we deliberate, as we have already looked at the technical section, Which centers on gas to power, challenges and opportunities, domesticating technology for gas processing. We are trusting that we go beyond theory and look at practical and achievable steps the nation and Africa needs to develop its gas sector for shared wealth. Today, we stand on the verge of history in our energy sector. We must change the narrative. Just as the Holy Bible says, we have stayed long enough on this mountain. We must take our journey to our destiny. So let us do all we can to harness the opportunities that promise not only to meet the immediate needs of our growing economies, but also to secure a sustainable future for the next generation and Commonwealth. Finally, I thank you for your kind attendance and participation at this unique conference led by SPE and other collaborating organizations. Thank you for your attention. And I want to thank the organizers and those that are presented. It's really been a very wonderful time. And I trust that this conference will yield the needed results as we move on as industry and as a country. Thank you so much.
Thank you so much, Ugo Amadi. Please go ahead, give me a warm applause. The chairman of the Nigerian Association of Energy Correspondents speaking there. I mean, in these days of energy transition, you have your work cut out for you, gentlemen of the press, especially when we're getting all this pushback from people who have 24 hours electricity telling us not to develop at all. Interesting. You should tell, as you have always done and continue to do, more of why we should invest and extract our resources. Thank you. Quickly, as I said, we'll take one keynote presentation. After that, I will bring up the panel who are waiting. And this presentation is coming from the Nigerian Midstream and Downstream Petroleum Regulatory Authority, whose Authority Chief Executive, Engineer Farouk Ahmed, is not here with us. Speaking on his behalf is the Executive Director, Hydrocarbon Processing Plants, Installations and Transportation Infrastructure. Please welcome Mr. Francis Ogari.
Good afternoon, everyone here present. As the MC has introduced me, my name is Francis Ogari. I'm the Executive Director. We call it HPPIT, standing for Hydrocarbon Processing Plant, Installation and Transportation Infrastructure. I want to thank you all and welcome you on behalf of the Authority Chief Executive, who is unavoidably absent because he's on another assignment out of the country. But he has asked me to do what he has to do for this summit, giving the opening speech. I've been privileged to listen to the presentation of my friends from CEPLAT, the private sector, the investment, and they've chalked up a lot of milestones, the annual gas and some other incoming future investment, as was pointed out. The other speakers too have pointed out things that are salient and notable. The last one from the Ghana mining. I've listened attentively, and I did a bit of reflection while they were making their presentations, and I was trying to tie it back to the theme of this summit, which is igniting the future. Our future, our children's future, our continent's future, is all tied back to this energy transition resource we have, which is gas, and which we have in abundance. But they went further to talk about driving sustainability of this energy, and through technology and innovation. Innovation is what keeps the world going. Without innovation, we won't be sitting on these chairs today. We won't be using those phones we are having. We won't be using those cars, those brand new ones, all sophisticated. And innovation has come through artificial intelligence too, which is the next frontier. But here, when we talk about the gas itself, our President, His Excellency Ahmed Tinubu, noticing that we have to sustain energy, and for people to be interested in investment, came up with 2 executive orders that have been gazetted to give some tax relief, some look at some physical issues, which borders on infrastructure, which borders on pricing, and those things that the private sectors can take and run with if properly interpreted. Today I know something about Nigeria because I'm a Nigerian. Nigerians are a bundle of ingenuity. And that's why we are today. Ingenuity that comes from perseverance and resilience, and from which we can do a lot of innovation. But I'm not here to lecture you on those things about ingenuity because the SPE has bringing this theme. But I'm just going to read through the speech by my boss, Engineer Ahmed Farouk. So let me do justice to the speech and at the same time give some perspective on it. Ladies and gentlemen, it is a great honor that I stand before you today to discuss a topic of paramount importance, creating an enabling environment for gas technology development and innovation for Africa. Our continent stands on the time, which is a new era where we must make that resolution that, that enhance but also process, refined, and expanded, and export right here on our soil what we need to do about innovation. Many thanks to the Society of Petroleum Engineers for organizing this summit. This is undoubtedly why SPE is leading the pack. Africa has long been endowed with rich natural gas resources, yet that potential for these resources to fuel our development has only been marginally tapped. The time has come to change that narrative. We must shift from being mere exporters of raw materials to becoming innovators and producers of value-added products in areas like digitalization and automation, gas value chain. So we went on further to say, migrating strategies from gas, flare reduction and utilization, this must be our focus. This transformation requires an enabling environment that fosters technological advancement and innovation in the gas sector. Creating such an environment necessitates a multilateral approach, which we have seen today from both the investors, the private sector. So what we are having here is a government policy that will help this innovation. Firstly, we must invest in education and training to build a skilled workforce capable of driving and sustaining technology innovation. That is not exclusive. We must talk about education, and I believe the speakers here mentioned this in their presentation. Secondly, we need to establish strong regulatory frameworks that encourage investment while ensuring environmental sustainability and safety. I'm standing before you as a regulator to talk about things we have done, which along the speech you will hear. Thirdly, collaboration between governments, industry players, and academic institutions is crucial to aligning research and development with industry needs. Moreover, we must leverage the power of entrepreneurship. I've heard when my elder here earlier on, before this, we started going through the presentation about this encouraging entrepreneurship. During the course of reading this, you hear that too. And create platforms for startups to incubate the ideas and transform them into viable solutions. Again, in the course of working in the organization, I've seen a lot of people come with technology, but as you will see when we read through the speech of my boss, we do what we call technology adaptation. A lot of people have ideas, but they don't have patents, they don't even know, they don't have what they call an history. A write-up that tells me this technology can go into phases. That's what they call gestation period of the technology. Going on, access to finance is also critical. I've had a lot of that about financing again today. Thus, we must work with financial institutions to develop procedures and products that support the gas technology sector. Again, those are the missing gap, and I hope the panel will stress on that too. And again, in NMDPRA, we have seen situations where people want funding from our MGDIF without the necessary thought out of a concept, and a concept that has been developed that can be carried forward. Innovation in gas technology not only can reveal and revolutionize our energy sector, but also create jobs, reduce energy poverty, and propel Africa towards a more sustainable and prosperous future. By harnessing the creativity and ingenuity of our people, we can develop technologies that are tailored to the unique challenges and opportunities of the African context. And I heard again somebody talked about indigenizing our technology, that we don't just copy and paste. And what we are talking about back in NMDPRA, we don't talk about adopting, we talk about adapting, because we know our peculiarities and our continent too very well. The Nigerian Midstream and Downstream Petroleum Regulatory Authority, which is regulatory instrument of gas pricing, midstream gas player regulation, de-risking of mainstream gas infrastructure through the midstream gas infrastructure fund, which PIA name as MDGIF, is committed to leading this charge. And again, we've been receiving a lot of application, which is going through the crucible for us to know which one is real and which one can contribute to the energy sustainability this summit is presenting. The NMDPR is committing time and resources to ensure driving growth in the midstream and downstream, and has, one, issued regulations to support midstream and downstream petroleum operations, environmental stewardship, dispute resolution, natural gas pipeline tariff, price, flare gas management, petroleum measurement, amongst other things. Again, we have encouraged the introduction and consolidation of new technologies, production processes, technical solutions, and verification tools through insurance of technology adaptation, pilot and development approval, which I talked about earlier on. 3, we have promoted efforts to decarbonize. Again, that's the touchy word here. Midstream and downstream petroleum operations through innovative and cost-effective solution to carbon capture and utilization. And I did hear again my Ghana brother talked about putting those carbon in wells. Again, we're on that verge going on further. 4, provided an enabling framework to maximize value from operations by refacing of either flared safety flare gas by using gas recovery technologies. And finally, 5, we have institutionalized recovery cost of research and development from cost-reflective pricing and tariff regimes. Again, some of these things have been published and they are in the public domain through our website. That I'm here, I can give you the access to the website to see some of this. The NDPRA will work tirelessly to break down the barriers that hinders innovation and to build bridges that facilitate the sharing of knowledge and technology. Together we can create an ecosystem that nurtures innovation and turns gas resources into a catalyst for growth and development across the continent. Again, I believe that's the focus of this summit. Opportunities for value creation can only be harnessed and optimized through innovative solutions. Key opportunities to mitigate demand-supply gaps with innovation solutions include: 1, wholesale supply of natural gas in liquefied or compressed form using specialized trucks, rail car, receptacles, or sea-going vessels. Again, these are all embedded in our regulations. 2, conversion of low gas naphtha-laden hydrocarbon streams to petrochemicals. Again, these are what we are assiduously working on. Then 3, deficit of low-cost technologies for transferring CNG from storage to distribution system. And 4, recovery of valuable hydrocarbons fuels and useful materials from the gases captured and processed. Ladies and gentlemen, in conclusion, the journey ahead is challenging. We all know that, and the last 2 speakers, they say something, and my elder here talked about the challenges. And in everything, like I said, we are people with ingenuity, and we love challenges. That's what is known about in Nigeria. The worry say, we say worry people know they come last. And we can never come last in this struggle. Knowing what we have, we use what we have to get to where we want to get to. But the rewards are immense if we put our head to it on this challenge. Let us embrace innovation, foster collaboration, and drive development to ensure that African gas technology sector thrives. The doors of the NMDPRA are open, and that's what the message I have for you from the Authority Chief Executive. We are not only friendly, we are also enablers of the business. We learn from you every day from the feedback we get from you. Someone said, that was a person who spoke last before I came, that about the business not expanding. We listen, and we get our feedback back to the policymakers, and that's why you see the president has been rolling out policies. It's all for intent, but the journey of 1,000 miles, like they said, starts with the first step. This is one of the first steps. having been conscious of what is ahead of us, and knowing what we have that we can use for ourselves, the regulatory body is just to streamline everybody, because that's what laws are for, that people comply, because we've seen cases of non-compliance. People try to go ahead of themselves. But we are there not hammering you, but telling you, please, there are regulations and there are extant laws, and work within those confines to bring about the sustainability of the energy sector. So thank you, ladies and gentlemen, for listening. And my greetings again from the Authority Chief Executive. Thank you.
Sound. Technical. Okay, sound. Please make sure that speaker doesn't go to sleep again. Thank you. Thank you very much, Mr. Francis Ogari, there speaking on behalf of the Authority Chief Executive, Engineer Farouk Ahmed. Without much ado, I'm going to go straight into the panel session. I want to ask that the speakers just give us a few more minutes. Let's finish this panel session, and then we'll give you, each of you, the plaques that we have prepared to appreciate your coming to contribute your thoughts on this discourse today. So I'm going swiftly now to both virtual and physical discussants. First off, I'd like to welcome our panelists, Professor Mukhtar Abdulkadir, TA on Strategy and Information to the Minister of Interior. You're welcome. Please, sir, you're welcome to your seat on the panel. Professor Mukhtar will be joined by the Executive Secretary, PTDF, Mr. Aminu Galadima, who is not, Ahmed Galadima Aminu, who is not here in person, but representing him is Mr. Usman Pinda, Deputy General Manager, Nigerian Content and Industry Collaboration Department. You're welcome, sir, to your seats on the podium. Thank you very much. Joining them is the Senior Technical Advisor to the Honorable Minister of Petroleum Gas, Mr. Ebel Nsa, Engineer Ebel Nsa, FNSE. You're welcome. Joining them is Mr. Joseph Ogushola, I beg your pardon, of NUPRC. Yeah, TCN, Disco, Embed, what do you call the other ones? Jenkos, all of them on a panel. Don't worry, I'll moderate the panel. Leave it to me. I'll moderate it. Just give me the question you want to ask them. Leave it to me. The fire will not catch and burn anybody. I will make sure I put it out. I'm being very serious. Who agrees with me? They need to have a talk, all those people. We need to put them on it. All of them. Thank you all very much. No other person, council chair, only them. We'll get a moderator, me or anybody, only them. We'll ask them questions, they'll answer. If we have to put space between their chairs so they don't hit each other, we'll do that, just so we'll have the conversation. Thank you very much. Okay, so let me now invite our moderator before I introduce our online panelists to you. Let's welcome our moderator, Chief Executive Officer, Eco City Projects Limited, Norbert Shiasok. You're welcome. Please. Joining us virtually for this panel, first off, is the Director, Planning, Research and Statistics of the Nigerian Content Development and Monitoring Board, Mr. Abdul Malik Halilu, one of the most brilliant minds when it comes to collaborative efforts between industry, academia, and indeed. Are you online, sir? Can you hear me? He's also the chairman of Triple Helix in Nigeria.
I can hear you. Yeah.
Fantastic. I can see you too. Thank you very much.
Yes.
Okay. There is also the vice chairman of NAEC, who is on this panel, Mr. Adiola Yusuf. Yusuf, are you here or are you online? Technical. Is Yusuf online? Yusuf, if you're online, can you unmute and speak? Yes, Yusuf is online. Somebody in the room is wearing this cap, Yusuf. See him there. I thought it was you. I kept looking at him. He's wearing the cap you're wearing. Please say something. Let me hear you. Your smile is speaking, but your voice is muted. Yusuf still cannot hear you, but once you are able to speak, the moderator will note that you are there. So you have two of them online. You have two of them online. Norbert, it's over to you now. Please drive the conversation. Thank you very much. Just tap, okay, please, when you want to speak, tap exactly, tap, put it on. When you're done speaking, tap and put it off again. Thank you very much.
Thank you very much. Okay, good afternoon, ladies and gentlemen. It's a pleasure to be here. Thank you, moderator. My name is Norbert Shelsuk. I'm a consultant, and I'm happy to be here to moderate this panel. But before I start, I just want to appeal to the operators of this center. You've heard the Ghanaians, align with us that they have a power problem, but I know that the South Africans logged on will have a field day teasing us on Twitter today when this thing goes off. So please, it only takes, just a day, so you don't have to always switch your panel if NEPA brings light and then put it back up. Please just allow us, let us finish this session in peace so that those logged on online will not have a field day harassing us. Thank you very much. To start, I took a few notes on the speech by the representative of the Authority Chief Executive, which is very, very, very interesting, and the fact that it captures, the thematic areas we should focus on in terms of policy. This summit is very, very good in the sense that we've heard about smart grid technologies, we've heard about AI and its application, and so for all the oil and gas companies here present, of course, it is good news for you because you're able to optimize your operations and so on. But I want to point out an issue once I go through this things I've noted. Number one, he talked about adaptation of technology and how to adapt it, for use in Nigeria. And I know that, of course, we have the representative of PTDF here and Nigerian Content Management Board. I know they will have a thing to say in terms of how to drive R&D and so on, and work with institutions collaborating to ensure that Africa is able to, learn from institutions, countries that have gone ahead. So under the PIA, of course, you have the Midstream Downstream Gas Infrastructure Fund that's been set up to help, de-risk the gas value chain. So this is quite good, and probably Mr. Insa here would help us at some point on this. He has talked about innovating to reduce energy poverty. This is music to my ears. It's really, really a topic we need to address. For companies, as I said here, this is very, very a good session for you because you hear about technology. But the biggest issue is, how do we adapt technology and innovate to help Africa solve its problems? And what is that problem? Africa does not have access to energy. Every company that's trying to get into gas is thinking about setting up an FLNG, which means they want to export Africa's resource. So we keep exporting our primary resource, forgetting that we're the biggest market in the world. Africa's sub-Saharan Africa population, 0.4 billion people. 53% of them don't have access to energy. Right? And so if you keep exporting just LNG out there, you're not tapping that food value. And so that takes the last issue where it talks about value addition. We hear about CNG, we hear about LNG. Natural gas can be much more. Natural gas for production of methanol. China is introducing methanol cooking stoves to its homes, introducing methanol for vehicles, and methanol, of course, is cleaner and so on. And if you do in some, if you compare for LNG, selling LNG per MMBTU compared to selling methanol per MMBTU, you will see that processing gas into this. Okay, so processing gas into these various derivatives will help us be able to channel some of these products that add more value to natural gas and bring more value to you, the operators and oil and gas companies. And so this issue that he talked about in terms of value addition is very, very, very important. And so that brings me to the questions I'm going to ask, and I'll start. First of all, apologies. Some of our panelists are online, and so I'm going to start with Mr. Unsa. We heard from our Ghanaian brother